Morning folks, I'm Greg McKenna. Welcome to Markets Morning for the first day of November. And I know that viewers of this video and readers of my note have probably had a pretty good October, but I'm pretty sure also that there's a big sigh of relief around many markets. That's because as we entered October, there was this real palpable sense of foreboding. It's a question I was asked by a journo yesterday from Reuters when we were just having a chat. And I said that the market kind of set itself up psychologically. And he said, well, does that mean November's going to be different? Well, you know, the easy money's been made in these bounces on stocks over the past couple of days. So it's no guarantee that we don't see further falls, but you know, people can come into a new month and think, heck, at least October's behind us and be happier to buy. It's a weird psychological thing. We'll have to wait and see. I'm going to kick straight into stocks again because I want to talk about that. The easy money has been made for this stock market recovery. And I'll talk about that in a sec. But just quickly around the grounds. The S&P finished at 2711, but that was much closer to the low of the day than it was to the high. It was about 25 points off the high of the day, and it gained only 29 points for a 1.1% gain. So it lost 1% in the last hour or so. Likewise, the Dow finished at 2515, but that was 200 odd points off its high, and the Nasdaq 100 finished at 6967, which was about 63 points off its high, so also about 1%. So that's really interesting. So obviously we had the goose up. No one wanted to sell into month end, and then some profit taking came. And most of them finished at or around, or below, sorry, all of them finished below the 38.2% retracement. In Europe was good night. CAC was up 2.3, DAX up 1.4, FTSE up 1.3. Australia had a good day yesterday, had a good night last night. Another 0.5% gain roughly for the SPY. The US dollar had a good night. It's at 97.10. Euro tested 113, has held for the moment. It's at 113.15. So not the biggest bounce you've ever seen. Sterling got a bid. It's up at 127.60 or thereabouts after some Brexit news. Nothing fresh, but Dominic Raab, the Brexit minister, said he hopes a deal can be done by the 21st of November. And that was then reinforced by the Irish foreign minister, I think Cavini or Coventry, who said similar. But he did say that it's up to the Brits to get their act together. So we're no different to where we were 2 weeks ago. 95% of the deal's done. Just got to get it through the British Parliament. Just got to figure out this Irish backstop idea. Anyway, so the Aussie got knocked a pretty bad 24 hours for the battler. It's at 70.75. Only really held up by the fact that everyone's short anyway. And also that risk appetite's up. We saw weakness in base metals, weakness in iron ore, weakness in precious metals. We saw a weak CPI yesterday. That means the RBA is never going to hike again. I'm joking. But I'd probably say 70% chance on a 2-year time horizon that there's actually a cut, not a hike, unless of course yours goes to 65 or 67 cents or something like that. That would kind of balance it back to 50-50. Then, of course, that Chinese data yesterday, which was pretty poor. 3 minutes, gee whiz, I better get the skates on. And manufacturing, and that's why base metals are off. So you got a kind of a perfect storm. So all things being equal, 70.75 is not terrible, but on the monthlies, the Aussie looks shot. Anyway, let's dive straight in, although 3 minutes and a half is hardly straight in. Let's look at the SPY, S&P, I should say. Right, so what do we get? We've got this downtrend line. This is the futures-based CFD. If you put the Fibos on the physical market, you'll find that the 38.2% was roughly the same sort of approach. So we had a run to the 38.2 and then a pullback. So the futures are now, after that clean out in the last hour or so, starting to rally again. So as I say, remember when we got to here, and then that was around sort of the 50% level. There was also an old trend line there. Then I said, look, the chances of a retest of the lows is high, and if that breaks, then we get a Fibo projection. We didn't exactly get the Fibo projection, which was, I think, 25.90 something, but we got to 26.04. So near enough there, and then we've seen this nice strong rally. It is a strong rally, and if I just look at my MACDs, it does suggest further gains. So we'll have to wait and see. But you've got to get up through 27.34, pardon me, for it to change from just being the garden variety. You know, we've had a sell-off, we've had a projection, it's hit that, it's bounced back, and now, and if you think about it, you know, that was a spike low, but that was the support zone, and then now it's the resistance zone. So 27.34, give it five or so points, in SPY futures terms, sorry, S&P futures terms, or in this CFD, is important. if I had to bet, I'd probably say a little bit more upside, but we'll have to wait and see. Don't forget, sometimes after a big move, the first signal you get is a head fake. So in time, I think we will retest those lows, and medium term, there's always a chance that we can break them. The Nasdaq, similar story. Very similar looking chart. We're back at the 38.2%. Same sort of dailies here. What is it? Just as a pure MACD kind of thing, it would suggest to me some further gains. Dow's pretty similar. So we'll go to the Aussie market, and then we'll do the DAX, and then we'll jump into foreign exchange. Aussie market had a good one, rallying hard. 58.79 is a real chance. Back up to this high here at 59.33 is a real chance too. So we'll see how that goes. Obviously, it pulled back a little. We're going to be driven by what happens offshore, and obviously, metals and mining might struggle a little bit. Sorry about that. Had to sneeze. Metals and mining is going to struggle a little bit, or should struggle a little bit today, given what we saw with copper, zinc, aluminium, and nickel prices last night. What we saw with gold prices too. What we saw with silver prices, they collapsed. So that could be a handbrake. And but this 38.2%, we haven't quite made our easy money. We pulled up where we should have, as discussed last week. But that overhead resistance, I think we should have a run at it today. But obviously we've got the Cajun PMI, we've got Australian trade, we've got those kind of things. Now DAX. Now obviously I look at all these other stock markets too, but we've got limited time, and I've got to get the skates on. The gap's been filled now for the DAX. This gap here. So 11.57 is the 38.2% retracement. That to me is going to offer resistance. 11.3. 50 thereabouts is support, but it does look like it's building for a run, but it will follow the US. Now, one important thing, let's go, actually I'll come back to gold. We'll do currencies first. Now the euro, where is my euro chart? There it is, rightio. So euro, you've got to look at the euro in weekly terms. That's a shoulder, that's a head, that's a shoulder. So we're still in a range, 118.50, 113. 112 sort of 75.80 is the level that I'm saying is the break. If that breaks, well, what's 125? Where's the neckline going to be? Let's say the neckline's there. That's 10. So once we get a break, that's 102, 103. Certainly, it's 10. There you go. There's that fractal. So if you have a look at that, that to me looks like, remember the castle formation I talk about sometimes when it pops up? That you run up the stairs and then you run across the parapet and then you fall down. That was a castle, remember? And then we crashed. So if you look at this as a broader castle formation, well, then it would be consistent for me to say that we're going down to the bottom, or, we're going to get thrown off the wall, if I could put it that way, and down into the 103 to 105 region. I think that's a reasonable medium-term outlook for the euro. Maybe not today, maybe not tomorrow, maybe not even with non-farms tomorrow, but the ECI index is now up at 3%. There is no way the Fed is not going to hike. Now, I got dollar yen wrong yesterday. It's interesting. I got a signal on my MACD system to go long dollar yen. We broke out, but it hasn't been able to break. It didn't get through 113.40, and maybe that's what we need to do to get to that 114.50, 70 region. Governor Kuroda certainly didn't do anything to discourage weakness in dollar yen yesterday, but it is where it is, and it's quite interesting. Bit of a conundrum on that one, so I won't bang on about that. Sterling, this is the daily. A nice bounce, a bullish engulfing for all intents and purposes. That means we didn't get to 126.60. That means we got to 126.90 or thereabouts as the low. Where does it look now? Clearly still respecting it. If 126.60 breaks, then we're on the way to 120. If 126.60 is holding, and we've had a low at 126.90, then there's a reasonable chance that you could get a bounce, and that bounce could come back to the 15, which is 128.96, which wouldn't be a bad rally from here. Another 100 odd points. Brexit is still the headline risk for everything. The deal being done is still difficult, but we will see where it goes. Now, I'm looking for the Aussie at the moment, if you're wondering what I'm doing. Right, so this is the Aussie dollar. It is still clearly in a downtrend. If you change that to be a weekly chart, and I do that, you really get a sense of the fall. You also get a sense that 70 cents is just very tentatively, starting to look like decent support. If 70 cents goes, and I always would call it sort of 70, sorry, 69.87 or something like that, then you've got quite a big fall, and the target becomes 68.5. The downtrend's intact on a weekly basis. The downtrend's intact on a daily basis, and we're still below the 2001 uptrend. So, this one, 70-20 breaks, then we can run. 71-20 breaks, then we can run. Other than that, we are inside a range. In terms of dollar CAD, it is starting to move. The oil and CAD relationship somewhere in the 80s at the moment in terms of a correlation on a daily basis. And oil fell last night. So you've got dollar CAD up. The US dollar was stronger, of course. It's 97 or something in DXY terms. So dollar CAD is up. So that looks like a clean break. We've broken, we've retested, and now we've run away. So let's do some Fibos on that maybe as a projection. Let's go from there to there. Seems reasonable. So 132.40, 132.49 seems like a reasonable place to be targeting dollar CAD. Now, that weakness in the CAD is despite hawkishness from the Bank of Canada, which is something really worth taking note of. Now, I know I've been talking about dollar CAD with the Sing dollar, and you can see it too is climbing. It's climbing towards the top of this channel at 138.90. Now, that's only 30 or 40 points from here. But we'll see how it looks when it gets up there. In terms of the other big Asian currency worth watching, this is dollar yuan. If you look at it in weekly, you just say that is a ridiculous move. Just a stupid move in terms of the steepness. But, dollar yuan is not a free float. It's managed by the Chinese to do what they want. And whilst they seem to be not letting it go through 7 at the moment, if you think about that NBS manufacturing data, 50.2 or 50.3, whatever it was yesterday, that's not far from a contraction. And while the services data were at 53.9 was better than the manufacturing, it too was 1 whole point below what people thought. Why are they allowing that data when they normally smooth it? I think it's because they're building a case for the renminbi to weaken. So let's hope that President Xi and President Trump can come to a deal. That would be a good thing. Pardon me. Kiwi, like the Aussie, still in a downtrend. And what best you can say for it is that that spike low down there at 64.30.40 remains support. If that breaks, I've got 61.60 penciled in. But if it breaks, but at the moment it's just drifting. That was a poor day for the Kiwi yesterday. You need to see a full reversal and takeout of that fractal there, that 66.05, for it to kick on. Now let's look at gold. I want to talk about gold. I've written about gold in the daily today, and obviously we've been talking about gold. It tried, it failed, and as the MACD rolls, so too does gold. Now, the correlation between gold and the stock markets is 0.8889 or something like that on a 35-day basis. So if stocks are rallying, gold can't rally. It's as simple as that. Gold's done really well in the face of a stronger US dollar, but this is about risk. This is about fear. And so if stocks are going to keep rallying, gold will drift back to sort of 1200 to 1206. If it holds that level, it can still rally. We'll see how it goes. It's very much a stock market derivative. Silver fell completely out of bed last night. Don't you love wedges and trend lines and things like that? So, where are we looking at now? We're looking at probably at least a test back to, sorry, let's just shrink that down so can I pick it up? 1390. So yeah, well, that's not that far. It's another 30 cents. So another 30 to 40 cents down on silver potentially with the break of that formation there. In terms of copper, stabilized a little bit, but still falling out of bed. If you think about that as the parapet and that's the ladder getting up the hill, then 255 remains the level that I'm looking for in copper. That data yesterday from China was just awful. So it's at risk again with the Kaijin and data out today. Right, WTI. OPEC. It has increased. Reuters survey said OPEC has materially increased its production. Then we get all the fears about global growth and demand growth next year. And we got another build in inventories. Granted, it was smaller than forecast, but another build in inventories. So what do we get? We've got a respect of this downtrend and a break of that downtrend, which puts my 64, 40, 50 region back in the frame. If that was to break, then I'm looking for 60 bucks. Similarly, although check out this line, Brent. Let's just shrink that down so you can get the context. There's the context. All right. So Brent breaks here, then I'm calling sort of 70 bucks or something like that. Where is that? That's 70.28. Something like that. That would seem reasonable to me. Let's just see where that is in Fibbo terms. Yeah, interesting. I was going to say it's got to be close to a Fibbo level. So 74 figure would suggest that breaks. Not that I use 76.4s or 23.6s that often, but people will be eyeing that. And if 74, let's say call it 74 the figure, if that goes, then that's your $4 catalyst move. Obviously, we'll hear more from OPEC in the jawboning stakes pretty soon. Righto, I think that's it, except for my friend Bitcoin. Let's see if I can get a decent Bitcoin chart, not the messy one. So it's going nowhere, folks. Interesting, Bloomberg had a story that the turnover in Bitcoins, or the change in wallet, so me selling to you, you selling to someone else and all that kind of thing, has halved. So no one's trading. All the hype has gone out of Bitcoin. Plenty of other markets to play with. You know, there's plenty of volatility in stocks. There's plenty of volatility in currencies. And even in bonds, you know, bonds bounced off 305 last week in the 10s. It bounced off, held 307 on a day close basis. That was a really important Fibbo level. And now we're back up at 315. Non-farm payrolls is going to be huge. Anyway, 16, 17 minutes is enough. Big night, huge night of data. We've got PMIs. The ISM in the States is going to be huge. We've got the Bank of England. I didn't talk about that. What's Mark Carney going to say about Brexit? What is the MPC going to do? What are the minutes going to reflect? Are there dissenters? Are people worried about growth? It's going to be really important to have a look at that. We've got trade here in Australia. We've got that Kaizen PMI, manufacturing PMI out of China. We've got PMIs everywhere else. My calendar from FX Street, though, says that we have European manufacturing PMIs tomorrow night. I'm not sure what the story is with that. So anyway, that's it from me. I'll be back tomorrow and we'll get ready for non-farms. Have a great day's trade. Bye for now.